Palantir stock had a rough week, shedding over 16% in just 5 trading days before managing a modest rebound today. The price now sits around $158.74, up from the 5-day low but still well below its all-time high. Markets responded positively to Federal Reserve Chair Jerome Powell's dovish tone at Jackson Hole, which lifted high-growth tech names. But beneath those headlines, deeper doubts about RE's real-world impact are rattling investor confidence, including in companies like Palantir. There's a growing counter-narrative emerging from academic research. A recent MIT study found that 95% of enterprise generative AI pilots haven't delivered meaningful returns. For every flashy use case, there seems to be dozens of explosive failures, or at least disappointing results. This academic lens might feel out of touch with everyday users who report real productivity boosts, but the markets care deeply about measurable return on investment. The skepticism stoked by MIT's findings and even OpenAI's CEO warning of a speculative AI bubble has put pressure on PLTR and its AI peers. Palantir's roots lie in defense and government contracts. Its suite of platforms, Gotham, Foundry, Apollo, and the newer AIP, powers intelligence operations and enterprise analytics. Their AI tools have real utility, but when valuations go through the roof, as they did this year, execution must be near flawless to maintain price levels. PLTR's valuation soared into the stratosphere. Forward price-to-earnings multiples over 200 times, EV to sales north of 100 times. That's a setup begging for a correction if growth slows or sentiment sours. That correction arrived this week. After roaring higher to nearly $190, the stock reversed sharply, dropping as much as 16% through Tuesday, becoming the S&P 500's worst-performing stock that day. This slide echoed broader tech weakness as investors rotated into defensive sectors. Today's bounce feels like a pause more than a turning point. But here's the heart of the forward-looking argument. Skeptical findings like MIT's don't mean AI is dead. They mean adoption is hitting growing pains. In the real world, users, from engineers to analysts, are using AI daily and seeing benefits in efficiency, ideation, and decision-making. The difference lies in metrics and narrative. While experiments may fail to measure impact, incremental gains in real workflows matter. Palantir's strength lies in embedding AI into mission-critical systems that may deliver long-term value, even if short-term results are uneven. So what could spark a reversal this time? It starts with renewed confidence. If markets believe Fed policy is indeed easing, the high multiple growth trade could come back. That's exactly the scenario Powell seemed to hint at today. Should inflation indicators soften or economic data reinforce the need for policy support, tech could catch a bid again, Palantir included. On the fundamentals front, Palantir needs to prove that its commercial and government segments remain strong. Q2 results were robust, hitting over $1 billion in revenue, nearly doubling U.S. commercial revenue, and raising full-year guidance. But now we need fresh catalysts, new contracts, launches, or enterprise wins that reinforce the story. The rumored $10 billion enterprise deal with the U.S. Army is one to watch closely. If that progresses, it could shift perception from speculative to stable growth. Technically, PLTR faces a key test between $155 and $160. A hold here or bounce higher could set up a base. If the rebound gains traction, the stock could revisit the $170 to $185 range. But break below that support, and combined with negative AI sentiment, it opens the door for another leg down, first toward the $140 range, then potentially lower. As a contrarian or long-term investor, a disciplined approach now may offer opportunity. This pullback may become a value entry if fundamentals stay solid. If you're more cautious, watching for stabilization and broader AI sentiment shift may be your signal. In closing, Palantir stands at a crossroads. On one side is the AI skepticism narrative, academic studies, valuation alarms, and market rotation. On the other is the real, tangible adoption of AI across governments and enterprises, customer wins, contract backlogs, execution. The next move depends on which side regains dominance. I'll be watching market tone, Fed signals, contract news, and technical action. This is one of the most interesting setups in tech right now. High stakes, high reward. Let me know what you think. Is this just a pause, or a real reversal? Are you seeing AI in daily use as delivering value, or is it still just hype? Drop your thoughts below, and stay tuned as we watch how PLTR attempts to turn this story around.